everyone, welcome to the weekly video again. So today we are going to look at the Dow as usual, and then we're going to look at the Nasdaq, S&P 500 and STI. Okay, so as usual again, we are going to look at the Singapore stocks and what are the stocks that we could be looking out possibly next week for their support and resistance. As most of you knows that the market hasn't been very bullish, so some of them starting to come down. So it's very important to look at the support and resistance. So again, we start off with Dow. So you can see Dow over here with the chart on your screen. So if you look at the index itself, it had a very important support at 3463. But unfortunately, due to code switching day on Friday, it has broken the very important support. As such, you can see a topish pattern breakdown. Okay, so this is not a very good sign for the Dow, as it can start a downtrend. As you can see, it has been going down for past consecutive days, and then if we really decided to continue its correction, we can see more downward movement with a projection level towards 31720. Okay, 31720. Now, will it be one straight line down? For the past consecutive 1, 2, 3, 4, 5, 6, 7, 8, 9, the Dow has formed 9 consecutive black candles, and it may lead to some rebound as well. So what I'm thinking over here is that if this is a rebound, we may want to see it back up here, and then if it's a dead cat bounce, it probably won't cross this level. So you will be halfway and then pull back to the low again. And this is where you can see that the Dow may break the low and continue to move and head lower towards its target level. So towards 31720 is another 5%. That also represent a decent correction where the Dow usually correct 8 to 10% when they do it. So let's see whether the market will continue to correct or it can't rebound right away. Now, any instance of potential rebound right away, let me just look through the examples over here, and then you may want to take reference to that. Okay, so here we want to see a double top. That is the first sign, first instant. Okay, so so far when the Dow breaks down, it really continue lower with these 2 minor top, and that magnitude of that selling was a 10%. Okay, and then we have another pattern where it rebounded, pull to support, rebound again, very similar to now, although it's not really at the top, but it's also a weak thing. It's a weak pattern. It's a bearish pattern rather. So we can see a downward projection of 8.2%. All in all, the Dow corrected about 14%. Now, of course, to take note of this is that then Donald Trump was still president of the United States, and then he was fighting very hard on the trade war. And this period of selling was due to the fact that the US and the China hasn't signed the agreement on the trade. So that's why the market keeps selling down. What leads to the sell down from the Dow over here is that we know that last Friday was quote reaching day. And then, of course, the Fed is signaling for an increase of interest in 2023 that is going to be another 2 years. So maybe the markets are preempting this. So anyhow, we can't 100% predict the market. What we can see is that what are the next potential movement will come. So if this is the case, then downtrend happens, and then we go by as usual, 8.9%, or if Dow were to extend its selling, 10% would bring the Dow to the next support level, which is around 30,892. Okay. If there is any chance for it to recover, of course, it needs to do it strongly by rebounding back to here at this resistance at 34,817. So if we can rebound strongly over there, then we may see some upside, okay, where we don't expect a downtrend, but then the Dow may go towards its all-time high. So frankly, my own personal view is that the Dow has corrected a bit prematurely because it hasn't really hit its all-time high after this sell down. So normally, if you were to take note that how Dow will move is that they would hit high, then pull back, hit even higher, pull back, and then to the last all-time high, they will really have a big crash or have a sell down, significant sell down. Here, over here, it doesn't hit the all-time high here, and it already start its selling mode. So some cause for concern is that whether we will see really a double top breakdown with a projection towards 31,000 or even 30,000 level for the Dow. So let's see how Dow will perform. Nasdaq 100, well, the Nasdaq still looking strong. So if you were to compare the chart, seems like they take turn to correct. So in technical terms, we usually call that sector rotation or sector in play. So they rotate one by one to correct the market. If you were to notice that the Nasdaq has corrected or had corrected earlier with an 8% down. Okay, so now we have the Dow average already 5%. So if the Dow average continue lower towards 8%, so it probably hit 32,000, very close to the projected level, or even exceeded slightly. So now Nasdaq is still looking okay, unless tomorrow evening on at the night time when it opens at 9:30 Singapore time, then we see the Nasdaq crash below the support at 13,800 or 13,765 thereabouts. So once it breaks below, then we may start to see another change in trend. So it's very interesting to see how Nasdaq perform tomorrow night. If Nasdaq can hit 14,304, now of course we got to take note that is there going to be any topish pattern like this? It's a mini double top, very similar to Dow. Dow is a huge double top. So will it happen again here? So this is a very big question mark. Now S&P 500 is sandwiched between the Dow and Nasdaq. And then here we can see that it is half Nasdaq and half Dow. Why I say that? Because first of all, if you were to follow the Dow has dropped by 5%, while S&P 500 hasn't dropped, it only dropped by 2.2%. So what is keeping it from dropping down heavier than the Dow is that we are looking at the Nasdaq helping the S&P 500. But nevertheless, it doesn't look very bullish as yet for S&P 500 also. So what we are looking at is that the index actually rested at its support level around here. marginally holding to it. And then if it breaks down, we have the next major support at 4,500, 4,058, I beg your pardon. Okay, so when we are facing such a situations, what would happen to the local market, the Singapore market? Now, if you were to take note that we actually have some ups and downs last week, and then we had a very good start to the week, where on the 15th of June, which was a Tuesday, that the market actually rebounded strongly. Then suddenly Wednesday, we experienced a heavy sell down. Then we managed to have some small rebound on Thursday and Friday. But is it going to last? Right, this is a very important question tomorrow. So if you look at the Friday's closing, it is optimistic, right, for the STI. Okay, so it is positively optimistic. So what we are looking at is that if STI can continue to close higher at 3152, of course, that gives us the first sign to suggest that there could be more upward movement. Okay, but of course, that is the first sign. Now, not barring that if this kind of candle would happen again, of course, we would probably experience some downtrend going forward if this kind of candle happen again. So when this kind of candle happen again, tells you what? A very important observation. Pushing up, lesser strength. Selling, heavier strength. These are signs and symptoms of downtrend. Okay, lesser buying pressure compared to the selling pressure. So selling pressure is heavier, means that there are more people willing to sell at a lower price, cutting throat, cutting their profits, or cutting losses. Then one have a strong intention to push the market lower. So this is what we're going to look out for next week, right? And if the market is going for a downtrend, we are looking for 3100 for support. If the market can recover, the resistance for it to clear and or rather test and clear is 3182. So we are looking very cautiously ahead, because next week probably we are facing a turning point. Okay, so this turning point is to give us suggestions whether we can recover from the selling, or we, give up our gains and turn back into selling. Okay, so of course, this is very normal that the market is either up nor down, or up or down. Okay, so the market is either up or down. So this is where we really need to look at which level that is closing to tell us which direction that is going to be biasing. Let's go to the Singapore market. Let's start with the banks. If you were to look at the banks, starting with DBS, DBS doesn't look very bullish as yet, as you can see from these arrows. These are pointing to the highs, and the highs are going lower and lower, while the lows maintain the same, where this supports resolutely held up DBS. So we can see that this major support is very important. And of course, this downtrend line, because this is going to be a gauge for us going forward. If DBS can break above this downtrend line by trading to this level, okay, then we are looking at potential recovery higher. Now, if DBS come to here and fail to break the line and then come back to the support level, this is telling us that it's going to break this major support any point of time. So we got to be careful, because the tendency to break down is higher. First, we have another lower high. Second is that if a major support gets tested too many times, it turns weak as well. Okay, so this is what I experienced for the past 13 years of trading. When I see support keep testing, so you thought that, hey, wow, support can hold, better hold. But actually, once it comes to this major support, many times it breaks it, it will be more bearish than you thought. Okay, so if this is the case, then we may see more selling pressure and even push DBS towards 28.55. So if I were to do a projection to see whether this 28.55 a very strong support, yes, because the projection is around, if it's going down, the projection is around 28.71. So that is also one of the support, I would say, because the whole zone is a support from 28.78 to 28.55 is a support level. So we're going to see whether DBS can rebound, break above the downtrend line, or it cannot at all. Now, OCBC forms a hammer over here, a white hammer. But of course, unfortunately, it is moving on a downward trend bias movement. Okay, so what we are looking at is that if this hammer can help DBS to rebound, or rather, sorry, I beg your pardon, OCBC to rebound, it probably face some resistance at 12.19. Okay, now if it doesn't rebound, the support level 1188 is very important. So my experience tells me that if a black candle follows a hammer, so meaning to say the stocks form a hammer first, the next day followed by a black candle below. This is usually a more bearish sign, as it tells you that the hammer is formed to hammer your leg. So when you hammer your leg, means that it tends to go lower. So it is also very important to note that I'm going to draw this called Fibonacci retracement. I don't usually use this, but just like to share with you this very important level. So 1188 is very important because in bullish terms where we are looking at support level, as you can see why OCBC managed to rebound and close higher than 1195 is because of this 61.8 Fibonacci support. So when we look for support level with Fibonacci, there are 3 percentage. First 38.2, second 50%, lastly 61.8. So OCBC is actually trading at a very crucial level. So once it hit 11.8, there is no guarantee that the support may hold. So hopefully tomorrow is a white candle while we shake off the selling pressure from the US market. Okay, so this is a very important observation tomorrow. UOB also a downward moving sign. As you can see that we are looking at the lows are getting lower. So it is a challenging time for the banks, and support level, if it keeps breaking, it will tell you that the market is bearish. So the good thing is we held at 2580 support, but the lower low is not a very good sign as yet. So tomorrow, if the UOB doesn't close here, then and close here, then we may see the support at this level around 25.38 be tested. So do watch out for the movement tomorrow. Very important candles. Okay. Also need to note that if the rebound happens, right, the next following day, long selling candle comes in, then of course this will tells you that it is a dead cat bounce, and then the rebound is weak and selling pressure is strong. Now GSS Energy. So last week, as most of you experienced this, is that the energy counters, the penny energy counters tend to run up. Okay, and then we have RH PetroGas, we have GSS running up. So ever since they run up, they start to pull back and or some consolidate at the top. So looking at GSS Energy, we are looking at it hitting support level at 73 cents. Recently, there's an upgrade on GSS Energy because of their transition to green energy, I read, if I'm not wrong. Okay. Now, if you're interested in this kind of counters, which are pennies, it is considered as a recovery play where the change in the business direction can help this counter to recover, where it was used to trade around 20 cents or even higher, 28 cents. So if this Doji gets a confirmation, right, it has to close at 77, then it may retest back resistance at 89, okay, 0.089. RH PetroGas is consolidating at the top, forming a short-term price pattern where you have a pennant look-alike formation. So we need a breakout at this range, trading at this range, and then close at about 215. Then we may see more upward movement. Of course, trading all these penny counters are not for the faint heart. So you really got to position size, right? Take care of your position if you are really keen to try out this kind of counters. Okay, because for me is that whenever I trade this kind of penny counters, I tend to get nervous because I would not like to hold them. And I don't know whether I can hold them or not, because all these are pennies. Any point of time they can go back below 1 cent, etc., or below 4 cents or below 5 cents, right? So all these counters are really the kind of counters that if I'm willing to set aside and lose this amount of money, if I cannot succeed in seeing the stocks rebounding or chong higher or rally higher, then of course I'm willing to forgo this part of the profit that I've made on others from other stocks. So all this you've got to really take note. So all these two counters are potentially rebounding. Of course, got to look out for the next candle, very important. See whether the buyers are coming in or the sellers are still selling. So if the sellers are still selling, of course you stand aside. No doubt the chips are the stocks price are cheaper, but we have to be careful on our side as well. So we do not want to throw good money into a bad counters. AEM, let's go to the tech counters. Looking very good as it is about to form, or it is on its way forming this higher low. So if it can succeed in forming this higher low, it should be testing 377. Looking good for now. Right, if I were to switch to the weekly charts, looking okay, right? Nothing very bearish as yet. So let's hope that it can succeed doing so by forming this higher low. Okay, so this higher low that I am talking about. Okay, so let's see whether it can close above 37 tomorrow. If AEM comes back to 358 rather, 358, then it could be a bad news. So we got to watch out. If 358 were to break, then of course it will start a downtrend movement towards 330 something. The support level here is 333. Then it may start to rebound from there again. UMS, the plan is still on. It's just that whether this can be a successful higher low. So we have the higher low over here to test the resistance. Then the stocks may potentially push up even higher. So the resistance to watch right now is 148. Nanofilm, very strong movement on Friday, push up all the way to 548, but the closing, the matching was crazy, right? Really crazy. Speechless. As I took a pause, right? So you can see it got slammed down all the way to close at 528. Okay, but the weekly chart still looks okay. As you can see, there is a flag pattern on the weekly chart. So let's see whether Nanofilm tomorrow can continue to move up back to 548. If it can do so, of course, it is definitely looking to go up, right? So higher chance to go up, I would say. Union Gas, after the strong upward movement, we experienced a heavy selling on the next day, presumably profit taking, but the volume of the profit taking is actually quite high. Now, I'm still holding this counter because of its fundamental. It's still very strong, and I want to see here is that this is a doji at the, let's turn on this indicator, which is Bollinger Band. Okay, so we can see that this counter has pulled back from the overbought region towards its this support level. Okay, around here. If you can see here, this 98 is a major resistant turn support. Now, another thing that I want to add on is that if I were to draw a Fibo level where this was the start of its upward movement, we can see that now Union Gas is sitting on a 38.2% support. So if a rebound here can happen, so it closed at 109 next day, probably there's a chance for it to move back up towards 120. Okay, so we shall see what's going to happen. Next is this penny counter called INTA, right? So I noticed that it has been consolidating in this range of trading. Now, if I were to switch to the weekly chart, it doesn't look that bad after all. Okay, so this counter seems to be looking positive, especially if it can break above 315 resistance. The support is at 27, so let's see whether which level get tested. So if you were to test 27 next week, then we can see is there any sign of rebound, then we can try to catch it. If not, then we should wait for the breakout to happen. Then INTA's next resistance is going to be as high as 395. Unfortunately, Yang Zhejiang did not continue its rebound, as I was excited last week about this rebound. I was waiting for Yang Zhejiang to cross above 147, 148. Then this is where I am looking at to take action myself. But unfortunately, after I turned on the moving average, it got stuck at the 20-day moving average, and then the break of this support spells downtrend as we see lower high, and then support breaks, and then it breaks its 50-day MA, and this is also a challenging moment for the counter. So now, of course, the immediate action for this counter to do, for it to be bullish again, is to go back up above 50, go back up above 20-day MA. So that is a very challenging moment. So for me, is that I'm staying aside and watch what's going to happen to this counter for the time being. Raffles Medical consolidating at the top over here at this resistance. If you take note that the lows are getting higher, so these are positive signs. Next is a very good breakout above 117. Then we may see this counter well on the way higher, right? Of course, what could be happening? We would like to see another maybe 15% upside if it can continue higher around 133 thereabout. So if it can break out 117 and searching volume like about 4 million. PropNex and APAC, right? These two counters are of the same industry. One is ERA, one is PropNex, of course. Both are consolidating with a pennant and flag patterns. As you can see, let's show you the weekly chart for PropNex. So of course, PropNex, we are looking at to break out above 158. and APAC really got to clear 6.7, really got to hit up close above 6.8, then we may see more upside. Okay, so these are some of the US analyses and Singapore stocks that I have presented to you, and hope that it is going to be helpful next week. So going to watch how this counter will to react next week. Okay, and of course, hopefully the Nasdaq continue its uptrend, doesn't sell down, because some of this counter like Tesla is really like forming a triple bottom type of formation and then looking to break up. Now, of course, we can see DG sign still very strong. Okay, and then AMD, as I posted last time, it was consolidating, waiting for breakout, and it did breakout. Square has also gone up, so hopefully they can continue its upwards movement and then move higher. Okay, so with this, good luck for the rest of the week ahead, or rather the week ahead. Good luck for the week ahead, and then I'll see you next week.